Hello and welcome to Big Deal. I'm Nisha Podar. Now, the Silicon Valley bank crisis sent shockwaves across the startup industry, but soon the US government support really arrested the damage. But are we at the risk of a contagion? Let's delve into the cause and effect analysis of the SVB crisis with the industry experts joining me on the show today. Let me welcome Rajeev Suri of Orios Ventures Partners, Nishith Rastogi of Locus, and Ashish Fafadia of Blume Ventures. Gentlemen, so good to have you on CNBC-TV18. Now, let me begin with the founder then. Nishith, your company was in the midst of this particular crisis. You did have deposits at SVB. Give us the first-hand account of what really transpired in those days.
Absolutely. It's definitely a week we will all remember for our lives. So it all started around Thursday, 5 a.m. San Francisco time, so about 5:30 p.m. India time, where a couple of founders found that their last night wires did not go through. They messaged on certain WhatsApp groups which we all founders share, and within the next hour, we actually approached the board with an email saying, "Hey, there is a potential crisis coming up. What should we do?" Our board was very responsive. We had a meeting a couple of hours later where we discussed the next steps. Now, it's important to understand at this point that this is still 7 a.m. San Francisco time. There's not a certainty in the news. So the founders and the board members, everybody is facing a lot of dilemma. One, should we move out all the money? Because many of us also have venture deadlines where you may attract penalties if we move out all the money.
Yeah.
Second, if you have big money, they are parked in much safer accounts like money market. To move them out, you need to take them to checking accounts, which have less insurance. Should we take that risk? Domestic wires were working, internationals were not. Small wires were working, big wires were not. Amidst all of this confusion, then everyone runs to safety, right? This was exhibit A tragedy of commons. All of us started, to decide to withdraw our money.
Yes.
We at least all attempted to withdraw to money, and that's what led to a historical, 42 billion withdrawal within the first 11, 12 hours.
Yes,
and
yes.
It was an extreme,
So, so the steps were taken as soon as you thought there could be a crisis. Ashish Fafadia, jump in on this. The VC community has been criticized for their role in the, run-in on the bank and creating that particular crisis. How do you react to that?
So I think the perspective is that the VCs did push out or encourage the founders to withdraw from the bank. At this juncture, I think we should definitely take in two, three factors. Number one, at that point in time, you have a clear challenge where the founders are complaining, and you are also observing that we are unable to get through certain wires. And it smells like a systemic risk, but more so, it is something which is a little more specific to the SVB bank per se. In a situation like this, I definitely feel that any investor has a fiduciary responsibility to their ecosystem of investors and founders to do the right thing. And there will definitely be an advice to take the flight to the safety. In a scenario like that, definitely one should say you could be a little more vigilant and take a big leap of faith and take care of the ecosystem. That's a fair point. But at the end of the day, we are responsible for making sure that the money is managed and given the right advice to the founders. At that point in time, the best thing was to make sure that payroll for the next month is managed. Let's understand that US has a dual cycle of payroll, unlike India.
Yes.
And if the founders are going to lose the capital to a little bit of a leap of faith that we as an investor were to take, then you are going to put risk the other ecosystem of your employees, of your investors, and those things have catastrophic effects as well.
Yes.
So it was a little bit of a devil in the deep sea kind of a thing.
Yes.
And in that moment, I definitely feel that the best thing was to make sure that you are going to be able to see continuity of the business, make sure that your employees and creditors are going to
Sure.
not lose faith in you.
No,
and
no,
take
I
the
understand,
business
Ashish. I understand. So it was a proactive measure taken in the interest of the companies and the portfolio companies. But Rajeev, Suri, how do you see prima facie the impact on India per se and the Indian startup industry as of now, as understood?
Thank you, Nisha. Appreciate the opportunity. I think there are 2-3 categories of startups that I would sort of look at. Let's sort of look at a group of startups that are sort of totally India focused, dominantly India focused, where the market is India, right? So clearly in that category of startups, we really do not have to worry too much about any contagion effect spreading to India, because very simply, these are companies that were born, bred, and operating in India. And hence their business models, their banking, other things would have also been done in India. So to that extent, I think we are very clear that that part is sorted, right? So that part is there. There is a second category of startups, which are basically foreign, they also have foreign footprints, and they've taken some foreign funding perhaps, right? That category of startup obviously has got some kind of an exposure to this, because the Silicon Valley Bank was one of those specialized banks that focused on startups and did a lot of good stuff with startups. So to that extent,
Yes.
this was a banker of choice for a bunch
Yes.
of these kind of startups that were doing it.
Yes.
That's the second category. I want to talk specially about the third category, which I think is an interesting category. There is this category of startups that are focused in only one geography, let's say India for the moment, but they have for some reason focused on registering themselves, let's say in Delaware or any of these places, because they've got
Yes.
into one of these accelerator programs, let's say a Y Combinator or something, right?
Yes.
This category, I think, is an interesting category because they now have a dual risk. Their market exposure and the risk is dominantly in India. So clearly the focus and what happens in India ought to be the one that should be the thing that the founders should be focused on.
Sure.
At the same time, because a bank is sitting in some other geography and the money is also sitting in some other currency, they are exposed to two different risks. There is a currency risk there, and there is also
Right. I lost the line there, but I got a gist of
happening in it, which are not necessarily things that the
Right.
founder can keep track.
Right. So, Rajeev, Indian origin founders
So
with companies incorporated overseas are the ones which are maximum at risk. But SVB was not just taking deposits, but there are other areas also like venture debt that they have a large portfolio in. And on the other hand, they're also providers of funds as LPs to many of the venture capitalists as well as private equity. So we'll discuss that and more. But Nishith, I want to first understand the semantics of it. You had the mid-March payroll coming. You have operating capital requirement for a company. And then there is a debt line also, for which again, if you have not consumed the entire debt line which was given by SVB, the US government support does not cover the remaining portion of that debt. So a lot of founders are really looking out for that amount also. Put all this into perspective from Locus' point of view.
Absolutely. So this was definitely an important event for us. We had 8-digit dollars logged in SVP, but given we are a global business, we actually had similar amounts spread over our Indian and European banks as well. So this ensured that we don't have working capital access issue as long as our locked capital becomes whole, which is what the FDIC ensured. But this does not insulate us. There was 3 immediate steps we needed to take. First, towards my team. As Ashish mentioned, in US, the payroll goes twice a week. So 14th March was the payroll. Even if you have the money, your payroll vendor was connected to the SVB account. So you needed to transition that. Second, my fiduciary duty towards my clients. I needed to make sure all my servers are up, all my vendors are being paid, and all the infrastructure payments that were going through SVB have been transitioned to alternate banking accounts. And this was all happening over a weekend. And many traditional players in finance are not fully operable on the weekends. So that further complicated the situation. And third, all our receivables. So we work with large public market companies like Tata's, Unilever, Nestle in multiple countries of the world. We needed to move our billing to them from SVB account to an alternate account. And this is not as simple as just calling them up, right? Your invoice needs to have the bank account numbers. They need to register the new bank. So moving all the incoming revenue, which is like a large portion for us, move into alternate banking accounts. So these were the 3 immediate steps that we had to do.
Yes.
Now, given that our overall capital was safe, we use our debt line as a safety line. So we are still evaluating what to do about it, either to keep it or offset it.
Right, right. So that's a great account of all the aspects of how a startup could have been impacted because of the association with the SVB crisis. But why did the crisis actually hit this segment in the first place? And what are the solutions and learnings going forward? We'll discuss all that and more when we return after a very short break on Big Deal. Stay tuned.